Welcome back to another episode of Harmonious at Lunch, the show that fuels your business success. I'm Brandon Gano, your host and guide through the world of harmonious business growth. Today, we're unlocking powerful strategies with industry experts to help your business thrive. If you're a business owner, entrepreneur, or executive, you are in the right place. Join me and our incredible guests today on the journey to clarity, growth, and success. It is time to revolutionize your approach to business. Let's dive in with another episode of Harmonious at Lunch. Welcome back into some more bite-sized business advice. And today we got some of my favorite topics. We're talking about taxes, but not how to pay them. We're talking about how to save them. Yes, love that. But we're also going to talk about the three-legged stool that every business stands on. That's where we're going to start. We're going to talk about taxes and hiring CPAs and all this fun stuff along the way. I like talking about not paying taxes, but we're going to talk to someone who can help us avoid them legally. So you're not taking my advice today. You're taking the advice of my guest, who is Roger Pearson. Roger, welcome to the show, and thank you for being here.
Thanks for inviting me.
So not a huge fan of taxes. I'm not saying I evade taxes. Let's not get anybody in trouble here. But we do want to talk about saving on our taxes, especially as we're growing our businesses from, maybe late 5 figures, early 6 figures to 7, 8 figures and beyond. Business looks drastically different. So why don't we start this episode with the topic at hand, which is the three legs that all businesses stand on. What do you mean when you say that?
What I mean by that, there's 3 basic aspects of building a solid foundation under your business. And the first one involves your legal format. Now, most people have heard the names, sole proprietorship, LLC, S corporation, corporation, partnerships, and all of that. Very few business people could sit down and explain what those things mean to you. But it's vitally important that you know. Most businesses will start out, for instance, as a sole proprietorship. Then they'll get an LLC to help them protect themselves from liability claims. And then they'll progress as they make more money and it becomes feasible. They become like an S corporation. Although in some states, if you're like in the trades, you have to be a corporation. They just some states require that. So you have to know all of these. You have to know if you're looking to build a business, for instance, that to grow it and then sell it. And a lot of people do that. They start a business just the purpose of grow it and sell it. Then you're going to want to be under a C corporation, and you need to know why that is also. The second of the 3 pillars that I call them is how to organize your paperwork. Now, most people, once they've grown their business, they go out and they hire a CPA, they hire a tax professional and everything else, and they assume that those people are going to do a good job for them. But, if you owned a huge plumbing company and you were going to hire a plumber, would you interview that plumber? Would you want to know if they knew what they were talking about? And yet the people that are hired for our businesses, and I see this time and time again, they do not interview. They just, I had a referral from so-and-so that this is a good CPA or whatever. And they just go and assume the best. And unfortunately, over the last 2 decades, I've had to correct a lot of mistakes a lot of those people made. It's just, I tell people, for instance, if you're going to hire a CPA or tax professional, and they just say, well, just drop off the stuff at the desk and I'll call you when it's done, run away. You do not want to do business with this person because they don't care about your business. You should be at a minimum meeting with your professionals that you hire at least twice a year. Once during the beginning of the year in February, early March, to determine what happened last year. And then in the fall, October, November, you need to be asking these people to say, these are my plans this year. These are the contracts. This is what I'm planning to buy. This is what I'm planning to invest on, so that you can come up to a plan that is going to reduce your liabilities, going to reduce your tax liabilities, because there's things that can be used. So you need to organize your paperwork correctly. You need to, know how to do your mileage logs or your reimbursements for employees, or how to depreciate your equipment, things like that. So you can give this information properly to the people that you're hiring to take care of it, because they can only do as good a job as the information that you're going to give them, as the conversations you're going to have with them. And if you don't know what your paperwork is doing, it's going to cost you money. And of course, the third pillar, that's taxes. what a lot of people think that these are three separate things, but in essence, your legal, your paperwork, and your taxes all work together. In one, you make a change in one, it's going to make a change in another, regardless. And people think of them as three separate, and no, they're all one thing. They're three separate items, but they all work as one unit. And you really should educate yourself to the point where you know how all three of them work and what they are. You may not have, you may hire somebody to work them for you, but when you're sitting down with that CPA, when you're sitting down with that professional, if you have the knowledge to sit there and have an intelligent conversation with that person, you're absolutely going to have a better control of your money and of your profits.
Yeah, I learned this lesson the hard way in one of my previous businesses, where I got my tax bill back at the end of the year, or in April, whatever, and I was shocked. And I was like, I went to my accountant and I was like, what in the world happened here? Like, I am not prepared for this. Where are all these like deductions and all this other fun stuff? And they're like, oh, well, you didn't ask us about that. You never told us you wanted that. And I was like, isn't that your job? Like, aren't you the CPA, not me? So I took this personal belief on that. Yes, first of all, I switched accountants, but second of all, I don't need to be the one doing the work, but I should be knowledgeable in all those three areas so that I can proactively have those conversations and also have intelligent conversations with a CPA and avoid some of those pitfalls. Like you're saying, meet in October, November, and wrap up the year correctly. Don't just get surprised with your tax bill. So I want to go back to the first pillar that you mentioned, the organization setup. So can you give me the super high level and quick overview of sole prop, LLC, S Corp, C Corp, B Corp, all these other things? But then also, how do we identify, based on where we are in business, which structure we should be in currently?
The first one is, of course, the sole proprietor is just a single person. They're just a single person that files Schedule C along with their personal, and everything, all their profits are subject to self-employment tax, 15.3%, and your regular tax, which is usually in 22 to 25% range. Okay, so it's the most taxed version that there is. Now, a lot of people will go out and they'll get an LLC, and this is one of the most misunderstood things that there is. I think it's a corporation, but it's not. It stands for Limited Liability Company. And those came about over a 10-year period, and each state had to pass their own because it's not even recognized at the federal level. The LLC basically just gives you a partnership or a sole proprietor the same type of limited liability that a corporation does. That's all it does. Instead of you having to buy $1 million liability policy to protect yourself, it gives you those types of liability. Of course, the S corporation is kind of a mixture between a regular corporation and a sole proprietorship, in that you have to get to the point where you want to go to an S corporation when you're making enough money to pay for the extra overhead of an S corporation, because you have to suddenly start W-2ing yourself. You have to W-2 yourself a going wage for the industry that you're in, is what the IRS puts it at. And they like to see between 40 and 60% of your net profit after expenses. So you have to do that. You have the cost of that. You have the cost of doing a corporate return instead of a personal return, which is a lot more money, usually about double the price. And so you have to get to the point where, okay, that's fine. I'm making enough money that I can afford that. Can it save me some money? And absolutely can. Because in S corporation, you only pay payroll tax, your Social Security, Medicare, on the amount that's on your W-2. And the rest of it comes down as investment incomes, the same as if you'd get dividends from IBM or some other investments that you have, and it's not subject to that 50. So you save 15.3% on that amount. It's just like a couple of years ago, I had a customer that came to see me. They were a sole proprietorship, home cook, home chef, made $100,000 profit the first year, and came to me early enough in the year I could use some loopholes to do it. Not really loopholes. I could use the law to their benefit. I'll put it that way. And we got them into an S corporation with an exclusion that I found. And I was able to save them they were going to owe $6,000 and they ended up getting a $2,000 refund. So because so much of the they didn't have to pay for that 15.3%. You know, so you benefit, you have to look at the benefit, because when I work with people, I always say, okay, if we change you from this to this is how much you're going to save in taxes. You know, and this is the type of conversation you should have, you know, and those are the judgments you make when you go to one. And like I said earlier, on the other hand, if you I have a C corporation I run everything under, and it's simply because it gives me some benefits that the others don't, that I can do as far as give myself personal benefits, shall I say. There's some things you can do there, but again, that's another overhead that you have. And the amount you pay to the state's probably going to be more. You know, you also have to consider the states, the cost of the states. For instance, in California, the state of California charges you over $800 a year for the privilege of having a corporation in their state. On the other hand, it's only $150 in Florida. So you have to look at those things too. That's why I say when it comes to the point of being affordable, then you should absolutely make the switch, but you should know the rules of when and how you can make the switch. Otherwise, you'll miss the window for a particular year, and you may end up owing a lot more than you could have.
So, I mean, are there rules of thumb to know? It sounds like, you know, you said 100,000 profit. I've heard that sort of a guideline from going from sole prop or LLC to S Corp. But outside of that, you know, like for example, the audience is mostly revenue, upper 6-figure, 7-figure businesses. Established business owners may still be operating under LLCs. I don't know. But when do you start to, what's the bigger conversation with your CPA? What are the questions to ask to know, is it time to switch, or am I in the best structure right now?
I really look at people, when you get to at least $60,000 net revenue net for the year, this is something you should start looking at it, saying, all right, is it right for me yet? But the other things you have to look at when you do that is, okay, what are my revenue projections for the next year? Am I going to go from 60,000 to 100,000 next year? If I'm going to go to 100,000 next year, then by all means, I need to be changing it now so that I can change my filing classification next year. So that's really kind of the point I look at it.
Okay. And then you also mentioned about selling your business. You should be, I think you said, a C Corp.
Absolutely. Because a C Corp is the only legal format that is an entirely separate entity unto itself. You know, you can't really sell an S corporation. You can sell the individual assets of an S corporation. You could sell the individual assets of a partnership, but you just can't sell the business. Well, you can, but it's a lot more complicated because you have to essentially sell all the individual assets of the business. But if your purpose is to sell it, like go on the stock market or whatever you want a big business, you want to sell it, you want to walk away with your millions, you know, and then a lot of people do that. You need to be a C corporation because it's a separate entity. It's nice, clean. You just sell it flat out to the person that wants to buy it, along with everything in it. And it's just a much cleaner way to do things.
Yeah, fun story. How about this? Put it in the comments below if you want to hear this fun story. I'll give you the highlights. My last business was an S Corp. I sold it under an asset purchase agreement, did not sell the entity, just sold the assets. And the person that bought it from me decided to basically steal the business and file themselves as the owner with the state of New Jersey, and got themselves in a little bit of trouble from doing that. So I can tell you the whole story. Put it in the comments if you want to hear that. We'll do an episode on that. But yeah, that's good advice there as far as selling your business. Make sure you're doing it the right way. So when we're looking at saving on our taxes, you said meet with your CPA twice a year. Give me some of the things to know and understand as the business owner, because like I said before, if you don't know, you're at the risk of what someone else knows and is willing to tell you. And hopefully you have a really great CPA where that doesn't happen. But if you are armed with knowledge, you can go in and have an intelligent conversation. You're obviously in a much better position. So what should we be aware of as business owners, and what should we be asking our CPAs as far as setting us up to pay as little tax as humanly possible?
I think one of the biggest areas, and the one that I always pound on, is depreciable items. Now, what are depreciable items? Most people do not have a clue what they are. It's basically the machinery, anything over $2,500 that you buy for your business that has a lifespan of more than 1 year. Okay, has to be depreciated, and that means it has to be written off over several years. Now, for instance, a computer system has a 5-year lifespan. Okay, so you're supposed to.
Can you say that again?
You're supposed to write it over Alexa was talking to me. You have to write it over a period of 5 years, or if office furniture is a 7-year property, you're supposed to write it over 7 years. All right, so you can't write the whole thing off. But there's ways you can do that. There's a Section 179. There's other ways that you can sit with your CPA or your tax advisor, really your tax advisor, and say, okay, I need more deductions next year than I need this year because I got this big contract coming up. And so you can push those expenses from this year, a lot of them, over to the next year where you're going to need them more. Or I'm ending up this big contract this year. I need more deductions this year than I'm going to need next year. You can bring some of those, you can accelerate some of those depreciable items and deduct them all this year. There's ways to manipulate the tax code. This is what the big corporations do. You hear people talk about, oh, this big corporation, they don't pay any taxes. They take advantage of the tax laws. And one of the biggest ones they have is depreciable items and credits. And the small businesses can take care of this also if they have someone knowledgeable, if they're knowledgeable and work with somebody that's knowledgeable and how to properly do it. And so every year I have this conversation with my clients. You bought such and such and such. Okay, how much do we need to deduct this year? How much need to be pushed off? Do we need to push it off 1 year? Do we need to push it off 5 or 7 years? And that's the type of conversations you should be having if you're really serious about reining in your tax liabilities like the big boys do.
Yeah, I love how everyone complains about, oh, Amazon pays no taxes, Tesla pays no taxes. You don't have to either. Technically, just get a better CPA. It's the same laws are in place for both small businesses and big businesses. Just they have people on staff who understand what they're doing, and most small businesses and entrepreneurs don't. So that's why I love this conversation. Now, Roger, I'm curious too, before we wrap up, when people come to work with you, whether they're coming from someone else, this is their first time starting a business, whatever, what are some of the things you're asking them to kind of be proactive about getting this knowledge so that you know how to set up their business and how to set up their taxes for the next few years? Do you have any go-to questions to understand, where they're at in business?
That's a good question. It really, really is. And so when I train other tax preparers or work with small businesses, the one thing I will always tell people is, I have to learn how you run your business. So I have a painting client. I have to learn how to run a painting business. I got a landscaping client. I have to learn how to run a landscaping business. If I'm going to do the best job for my client, I need to know how their business works. From one end to all financial directions before I can give them proper advice on what the best direction for them to go is. And there's very few people that want to take the time to do that with their clients because we're in a fast-paced society now that doesn't want to take the time to sit down and get to know each other. And that's a shame.
It is indeed, but that's valuable. So let me end with this final question. If someone listened to this interview and they're like, I've been in business 15 years, I have never heard any of those questions from my CPA, my tax advisor, or I never even thought of them. What are some really good ways to go out and find a good tax advisor, CPA, business advisor, whatever you want to call it? And I'll also just toss your website on the screen here too, just in case.
The basic thing is, regardless of whether you want to or not, if you're serious about being successful in the business world, you need to learn about all these things yourself so that you can properly go out and interview the right person for you. And unless you know it, you're not going to know how to interview it. So educate yourself. I know it's a pain. I know it's time consuming. I know you'd rather be doing something else, but you need to educate yourself if you're serious about your business.
I love it. That makes complete sense. So if someone does want to take that next step, they want to educate themselves, what do you have available on your website as far as resources?
I have a full slate of resources. I have everything from consulting services. If you just want to sit down and talk a while and ask a bunch of questions. I have college level courses that go into the 3 pillars that I've been talking about today available, and it's all linked from my website. I have a YouTube channel that goes into a few things. So no matter what stage of business you're in, I've tried to put together a system that will fit you and your stage of business, basically. So, and my mission is just to help as many people as possible succeed in their business.
That's so great. Thank you for being here, Roger. This was awesome.
Well, I appreciate it. It was an interesting conversation.
For those of you watching and listening, hopefully you thought it was interesting too. If you want to learn more about Roger, go check out his website. It's in the show notes wherever you are. Check out all the resources he has available and see if you could learn a thing or two and hopefully set yourself up better to have a better business, but also pay less in taxes. That's the most important thing. We'll see you on the next episode of Harmonious at Lunch. Make sure you subscribe so we can keep bringing these episodes to you every single day of the week. Thanks for being